It's time now for a look at today's business news with Brian Quinn. Hi, Brian.
Hey, Jenny.
Now, you're going to start with the markets. They're trying to bounce back after that worst day Monday since the 2008 financial crisis.
Indeed, a crash on the crude oil markets is what triggered, of course, a global equities sell-off as a deal between the OPEC oil cartel and Russia to prop up prices by cutting production fell apart over the weekend, sparking expectations of a price war on crude. Well, Monday saw oil prices drop nearly 25% to four-year lows. Brent and West Texas Intermediate have made some significant gains on Tuesday, though nowhere near enough to recoup yesterday's losses. Futures in both Brent and WTI are up around 10% today. They lost as much as 30% at some point yesterday. On the equities markets today, some strides being made towards recovery after officially entering bear market territory yesterday. London's FTSE 100 up 3.33%. CAC 40 here in Paris not far behind, with shares in Air France and Total recovering 4% and 7% respectively. The DAX in Frankfurt is up 2.5%. Even Milan's FTSE MIB up 1.6%. France 24 business editor Stephen Carroll was at the Paris Stock Exchange this morning. He says it's going to be some time before markets get over yesterday's double shock.
Around the world have been taking steps to try and ease the pain from the coronavirus. We've had rate cuts in the United States by the Federal Reserve, action taken by the Bank of Japan as well. But we are waiting to see what the European Central Bank will do about it. They haven't taken any major steps yet. We'll be waiting for their decision on Thursday. There is an index that tracks all of the volatility on the stock markets. We call it the Fear Index, and fear is still pretty high on the markets out there. We're still looking at levels that are not far off those in 2008.
Well, one reason for those gains, investors are now pinning their hopes on some major stimulus plans in a bid to counteract the economic effects of the virus.
Yes, Monday's oil shock came as markets were already losing ground as efforts to stem the spread of the COVID-19 coronavirus take a serious toll on economies worldwide. After Wall Street indexes lost over 7% Monday, U.S. President Donald Trump announced his administration would be taking, quote, major steps to safeguard the American economy. Trump's economic advisors have already floated the possibility of tax credits, loans, and subsidies to specific industries and areas that have been affected by the virus. Trump expected to meet with congressional leaders Tuesday to nail down those measures. Here he is on Monday.
And discussing a possible payroll tax cut or relief, substantial relief, very substantial relief. That's a big number. We're also going to be talking about hourly wage earners getting help so that they can be in a position where they're not going to ever miss a paycheck. We're going to be working with companies and small companies, large companies, a lot of companies, so that they don't get penalized for something that's not their fault.
Well, here in Europe, Italy is now at risk of a new recession as it imposes that countrywide travel ban to try and stem the virus's spread.
Yes, the Italian economy was already showing signs of trouble before the country became the European epicenter of the viral pathogen. Well, now with restrictions on travel and public activities that began in the north being expanded across the entire country, analysts say the economic consequences could be dire. Monty Francis has the details.
Usually full of tourists, St. Mark's Square in Venice and the streets in Milan are now virtually deserted. The impact of the coronavirus on the Italian economy is already evident, with the northern regions of the country hardest hit by the virus, representing almost 40% of Italy's GDP. A nationwide quarantine is certain to make matters worse and could push Italy over the brink into recession.
I should note, Italy is the world's 8th largest economy. And so when you have a country shut down that's the 8th largest economy, it does have ripple effects. Again, it can feed on itself, a negative feedback loop.
The Eurozone's third largest economy was already showing signs of contraction. It still has not fully recovered from the global financial crisis in 2008. Last year, the country experienced 0.3% growth, the worst since 2014. To counter the effects of the crisis on businesses, the Italian government plans to inject 10 billion euros into the country's economy. And in spite of the outbreak, Italy has decided to maintain international trade, particularly in the food and pharmaceutical sectors. Italy's is an economy that depends on its exports, and a best-case scenario comes from the Organization for Economic Cooperation and Development, which forecasts zero growth in Italy for 2020.
Next, now, Australia's biggest airline is cutting back sharply on its international flights as it faces a dropping demand with the coronavirus.
That's right. Qantas is dropping international capacity by nearly 25% for the next 6 months. 8 of the company's 10 Airbus A380 double-decker jets grounded as it seeks also to delay the planned purchase of up to 12 Airbus A350s. Investors and executives taking a hit as well. An €87 million share buyback plan is put on hold as top management take a 30% pay cut for the year. CEO Alan Joyce says he expects Qantas to weather the crisis, but that not every company will be so lucky. Here he is.
Like Norwegian Air.
We are in a position where we believe that we are one of the fittest airlines in the world. We're in a strong position to be able to come out of this and take opportunities, and this will be a survival of the fittest.
All right, Brian, just to wrap up now, some companies in the U.S. are stepping in to make sure their more vulnerable employees don't lose their livelihoods amidst all of the contagion prevention measures like quarantines.
That's right. Google and Microsoft among the firms who are guaranteeing hourly workers' pay, even though they may not have actual work to do. Janitorial and cafeteria positions among those gone quiet as companies encourage their staff to work from home. The situation, though, is casting a harsh light on the deficiencies of both the U.S.'s private healthcare system and its lack of paid sick leave.
Returning from a trip to China, Asmel Martinez Azcu developed flu-like symptoms, so he went to a hospital in Miami to get tested for COVID-19. It turned out he didn't have the virus, but was stuck with a hospital bill for more than $3,000. His insurance company said he'd have to pay about half that amount out of pocket. He had insurance, but some 28 million Americans have none at all, making high hospital costs a factor that may keep them from getting the tests and treatment they need. In the meantime, some American companies are stepping in to help shoulder the burden on their employees of potential costs associated with COVID-19. In Seattle, Microsoft said it would continue to pay hourly support staff, such as cafeteria workers and shuttle drivers, who aren't working while most everyone else works from home. Google announced a similar move, its CEO saying, "This is an unprecedented moment. It's important we approach it with a sense of calm and responsibility because we have many people counting on us." The Trump administration is now considering using a national disaster program to reimburse hospitals for caring for uninsured people infected with the coronavirus. That's because often hospitals are forced to absorb the costs when patients can't pay. Figures show that hospitals in the U.S. provided more than $38 billion in uncompensated care in 2017. There are projections a pandemic similar to the 1918 flu could mean a financial loss for hospitals across the U.S. of nearly $4 billion.
And Jeannie, a lot of analysis points to Europe's strong social safety net as actually a strong buffer against some of the more severe economic damage of this virus. So we'll see what comes out of it in the States.
All right, Brian, thanks for that. Brian Quinn there with your business update.